Well, 200 points is what the Nifty closed lower by, so there was pressure, and the larger part of the pressure was because of the breadth. 4:1 on the breadth, favoring the Reds, and therefore what we saw was plenty of pressure across the board. Banks, IT, both generally when they are down over a percent, you tend to see pressure, right? But there were some stocks which were a saving grace. By the way, Interglobe was the top loser on the Nifty 50 index, followed by DRL and Geo Financial. But Bajaj Auto, Nestle, Tata Consumer, it was essentially consumption along with Eternal, stood out, all gaining 1% plus, but just not weighty enough to move the index. In fact, broader markets too were in decline today, 1% lower on the Nifty Mid Cap Index, 1.3% lower on the Nifty Small Cap Index, so there was pressure there as well. Again, the breadth there was sharply negative, 1:5 on the advanced decline on the Nifty 500 index, which is broader markets seeing pressure as a result. Bandhan, Oracle, PG Electro, Aavas Financiers, Ola were just some of the big losers, all losing 5.5% plus in trade today. Some of the gainers on the Nifty 500, and there were a few, at 12% higher on data patterns. M&M Finance, second straight day of gains, 8% higher on M&M Finance. Bajaj Auto, I spoke about, 6% higher, top gainer on or one of the top three gainers on the Nifty 500 index, and RR Cabel. That was the other one, 5% higher on RR Cabel as well. Some good moves seen on some of those counters. Sectors and FMCG, consumption, auto, those were the only ones which actually stood in the green. Outside of that, everything was a solid coat of red. Realty was the top loser along with PSU Banks, IT, Pharma and the Nifty Bank, all of which declined over 1 to 1.25% plus in trade today. Some pressure there. But the F&O Qs, Sajid, how do the Qs look and what are they indicating for the day of trade of Thursday?
If you look at what happened in the F&O market, we started a day on a weak note and then gradually inched below the 24,000 mark, led by pressure coming in from IT and banking stocks, where the Nifty IT was down 1.5% and the Nifty Bank was down 1.23%. At the end of the day, the Nifty breaching the 24,000 mark, and from an open interest point of view, we saw nearly 1.34% jump in open interest for the Nifty 50 futures, and the Nifty futures are trading at a discount of nearly 14 points in today's trade. Nifty Bank is another play which is there, down nearly 1.23%. We saw some shorts getting built in Nifty Bank there, 2% up in open interest. If you look at the Nifty Bank constituents, across the board, we were seeing some shorts getting built, especially in the private sector banks, HDFC, ICICI, Axis, Kotak, and even the PSU banks were not spared today, except for an IndusInd Bank, which is expected to come out with the earnings. The entire banking pack saw short build up in trade today. The call and put writing, call writers were very aggressive through the day. 24,000 is where we saw maximum action today, and there was a lot of call writing and call open interest positions getting built on 24,000, 24,100 and 200 there, with some unwinding seen at 24,200. So that if you look at the entire distribution chart, you see that the next big support is coming at 23,500 for the Nifty, and the Nifty now inching below the 24,000 mark. It becomes very a very important figure to watch out for, because we are into the last week of expiry for the July series, and we'll start seeing some bit of rollovers happening and some unwind of long positions going into July 28 when the NSE expiry happens there. But in the futures gainers, you'll have stocks like Bajaj Auto, which was up 5.5%, Nestle was up 3.2% and TVS Motor up 3%. So all the good results were getting good support in today's trade. Among the losers, we had Bandhan, which was down 16.5%, Oracle Finance 7.5%, and PG Electro over 5%. So all seeing some short build up or a long unwind happening in today's trade. Open interest gainers include Bandhan was the biggest one, adding nearly 31% in open interest. Vishal Megamart was another stock where we saw some open interest build up of nearly 15%, and SRF again, that's something saw an open interest build up of nearly 14% of the earnings that came in today's trade there. But overall, if you look at the losers pack, you had very few delivery, REC, and saw some long unwind happening, and Polycap saw some shorts getting covered, and so 5 to 7% cuts in the open interest position for these stocks. But for the market going into tomorrow, it's going to be a very critical level to 24,000 level that needs to be watched out for, as crude inched about $94, and there is uncertainty which is now growing with respect to West Asia and the kind of impact we have seen. And in many of the earnings, we have seen some of the margins getting hit, and so that's something to worry about. And the earnings season getting in full swing in the next 10-15 days, you will have a lot of uncertainty and volatility in many of the stocks.
All right, so that's the take coming in from an F&O standpoint. But Meryl, here, which are the cues you want to keep on your radar for Thursday's day of trade?
Right, so here are some of the major events which could be seen shaping markets on the 23rd of July. In India, it's the weekly Sensex expiry, so do watch out for volatility in the markets. While globally, investors will be tracking US's initial jobless claims as well as the Chicago Fed national activity data. In Europe, all eyes will be on ECB's interest rate decision, which is going to be followed by President Christine Lagarde's press conference. On top of this, the Eurozone consumer confidence data will also remain in focus. On the earnings front, global heavyweights like Intel, Roche, and Nestle Group, Nestle India's global parent, as well as T-Mobile will be announcing their quarterly results. And back home, the result spotlight will be on Infosys and Cipla from the Nifty pack, while other companies including Interglobe Aviation, IEX, Go Digit, Motilal Oswal, and many others will also be set to report their first quarter results. In the primary markets, do watch out for Extranet Technologies, Indo MIM, and Lohia Corp, where all of these three IPOs will be set to open on the exchanges for subscription. And on the corporate action fund, do watch out for Astha Spintex. The board over here will be considering a bonus issue in a 1:1 ratio, so that could keep these shares in focus as well. So yes, these are some of the major cues for investors to track on the 23rd of July.
All right, thank you so much, Meryl, for that take. Let me go across. We're joined by Rupak Dey, Senior Technical Analyst at LKP Securities, joining us this evening. Rupak, great having you. Pressure on the index, Rupak, likely to sustain?
Yeah, I think so. Today, Nifty has given a breakdown from its 2 days consolidation, and also the game between the WTA crude and Nifty has started again, where the WTA crude is sustaining above 50 days exponential moving average, and Nifty is in the verge of breaking down below 50 days exponential moving average. The sentiment might remain in the short term. It might remain weak till the time it is remaining below 24,100. The sentiment might remain weak. On the lower end, support is at 23,900. If it falls below that, further correction looks possible.
Rupak, from some of the stock specific point of view, private sector banks, how are you looking at many of them, like an HDFC Bank or for that matter an ICICI?
So HDFC Bank and ICICI Bank are looking like they're not looking like they're going to deviate from each other. Like while the HDFC Bank is looking very weak on the chart, whereas ICICI Bank is not looking that weak until the time ICICI Bank is holding above 1430. The sentiment might remain positive for ICICI Bank. Well, as long as HDFC Bank is trading below 800, the sentiment might remain negative around the HDFC Bank.
Sectors, which was a big laggard in trade today and has been very choppy, in fact, has been the realty pack, Rupak. What next, according to you, for that one? Is this a buy on dips kind of opportunity?
Absolutely. Realty pack is one pack which is still looking good. Today it is looking looked a bit bearish, but for the short term, the thing is likely to play out well. And I think 880 is going to act as a very crucial support for the index. And on the higher end, the index might move towards 1000 in the short term.
Consumption was one theme which was up today. Internal numbers came out. You have Tata Consumer expected later in the week. How do you look at these two stocks?
So Tata Consumer is looking more or less good on chart, but it needs to move beyond 1100 decisively to witness a significant directional up move. However, if it does not move beyond 1100, the consolidation might continue in the stock.
Eternal numbers came out.
Eternal for the short term, it is looking good, but for very near term, like for next 2-3 days, it might consolidate. Once the stock moves beyond 300, we might see a significant up move towards 350 in the short term. And right now, it is holding above its 200 days moving average. That thing is likely to provide the cushion to the stock.
Any picks you have today?
Among my picks, the first one would be Glaxo. The stock is comfortably sitting above its 200 days moving average, and it has given a consolidation breakout. And I expect the stock to move towards 2700. So it's a buy call with a stop loss of 2440. On the next call is Apollo Micro. Apollo Micro particular stock has moved after a downwards consolidation. I think the up movement might continue, and it's a buy call for a target of 430. And on the lower end, 390 would be the stop loss.
Rupak, what should one make of the moves with regard to consumption broadly? I know you've spoken about a couple of consumption stocks, and within that basket also auto, because you've seen some very decent moves post the numbers. Bajaj Auto, for example, TVS has moved up as well. What should one make of the opportunity, if any, short term within specific stocks in these two baskets?
So, among the auto stocks, I'm liking two-wheelers more as compared to the four-wheelers category. On the charts, stocks like TVS Motor, Bajaj Auto are looking good, whereas the auto index overall is looking more or less good, like sideways to bullish momentum might remain in the short term. If I look at the chart of TVS Motor, specifically, I am liking that stock chart very much. It has given a consolidation breakout and it is sustaining comfortably above 200 days moving average. And I expect the stock might move towards 4100 in the short term, whereas the stop loss can be placed at 3820.
Rupak, thank you so much for joining us, giving us that perspective. That's, of course, how Rupak is expecting tomorrow as well as the rest of, or the medium term to really play out with regard to auto. Let me, in fact, quickly flag off. Pharma was, of course, the theme of the day, and we'll have Vishal Manchanda on the other side to give us a perspective of what the future holds for India pharma companies exporting, especially generics, to the US. We'll have that conversation with Vishal on the other side. Is this a buy on dips, essentially? That's what we're trying to kind of address. Should you go out and buy pharma at this point of time? Is there an opportunity? On the other side, stay with us.
Back here watching Market Edge, and the theme of the day is pharma, and joining me is Vishal Manchanda, Senior VP Institutional Research at Systematic Group. Vishal, thank you for joining us. You have overnight President Trump talking about 100% tariff on generics if they are not shifted in next 2 years to the US. How do you look at some of the Indian pharma companies and how are they placed, whether they're well off or they are at risk?
Yeah, so good evening. So I think we were not expecting these announcements, at least on the generic drugs. So we have been hearing about tariffs on the patented drugs, but I think this is for the first time we are hearing about an announcement around generic drugs. So in my view, levying a tariff on generic drugs is extremely difficult because, one, you cannot have manufacturing of generic drugs done in the US, because if you do that, it's going to become a very costly affair. So drug prices can increase maybe 200, 300% from current levels. So that will be inflationary for the US economy. Again, Indian companies have invested massive capital in terms of setting up plants for the US markets uh, in India. So I don't think companies would be open to reinvesting additional capital for the same thing again in the US market. So that probably their capital allocation policy would not allow them to kind of make those incremental investments in the US market. And I think if at all they do, they will do it, they will limit it to only for drugs which are very high value, wherein their gross margins are extremely high and it makes sense for them to make those investments. Otherwise, not for the commodity generic drugs that companies would look to invest in the US.
Hmm. Uh, Vishal, from an economics point of view, the backward integration into raw material for these drugs, uh, is it easy to replicate that for the US, because the US does not have the API ecosystem? It's there in other countries and India and maybe China. But what about US? I mean, it's not just the final product, but also the backward integration as well.
Yeah, I think you're absolutely right. Developing an ecosystem would be extremely essential to have manufacturing done in the US, and developing an ecosystem can take, say, 20, 30 years. So you'll need, and in pharmaceuticals, the ecosystem is very unique. Like for every drug, there is a very different supply chain. You will have a different supply chain for atorvastatin, a different supply chain for paracetamol. So that makes the supply chain extremely complex here, and it is practically not possible to replicate that in the US.
Vishal, therefore, there will therefore be a disproportionate advantage for those companies with manufacturing presence in the US. Would you reckon that to be the right way to think of pharma now, and therefore should bets be placed on some of those names?
So I don't think US would, these tariffs would come into, so these tariffs may not actually materialize, is my view. But if they materialize, obviously then those companies which already have a manufacturing footprint there, I don't think there is any Indian company that has a meaningful manufacturing footprint in the US. And again, we are not very clear whether APIs would also attract tariffs, or it would only be the formulations that would attract tariffs. So how API prices would move in response to these changes, all of those complexities will come into play. But I think any player who has got a meaningful footprint in the US is definitely better placed from a risk standpoint. It is less risky to be positioned in those names. But I don't think we have names that have meaningful manufacturing footprint in the US. Probably Cipla is one that does meaningful manufacturing in the US, and probably some of their high value drugs that they are looking to launch in the US. Also, they have an alternative manufacturing site in the US for those drugs. So to that extent, Cipla maybe is a company to look at.
Well, there is already an investigation going on under Section 301 for generic drugs. What happens to that? Because, India and US trade deal is also dependent on that investigation which needs to get completed. And now with a tariff of 100% for generics, do you think that the trade deal is much more elusive now?
So I think this investigation that's ongoing on the generic drugs those tariffs on account of that investigation will not be incremental to the tariffs that they are currently proposing. So essentially, even if that concludes the way we would not want it to, but if that concludes in a way tariffs are imposed, it would these tariffs would take care of that situation.
And what kind of investments, if required, because it's economically doesn't make sense because the cost will go up, but if required, will Indian pharma companies will have to make to reshore these facilities in the US? Have you done any maths on it?
I don't think they would do that because there is already this massive capital that they've deployed in India, manufacturing capital they've deployed in India for US drugs, and I think if at all they have a choice, and US generics is not an attractive space to be in as of now. So incrementally, they would actually refrain from putting in more capital in the US. Rather, they would like to diversify away from the US if they have a choice to deploy any incremental capital.
And Vishal, therefore, you're clearly suggesting that this is not sustainable, right? Because these generic drugs to be sold from India to the US on a 100% tariff, commercially infeasible from a US consumer standpoint as well as from an Indian manufacturer standpoint, and therefore not realistic.
Yeah, that's what I...
Perfect.
Yeah.
Perfect.
Yeah.
And what are the value pockets at this point of time? So this fall that we've seen in some of the stocks, say for example a Marksons, just from an example standpoint, 7% lower, good time to probably go out and buy some of these?
So I would rather look at the large cap names and gradually accumulate those names at current levels. So among the names I prefer, Cipla is the one I would prefer to look at this price, and probably maybe a Dr. Reddy's as well. That has also corrected meaningfully lower from its peak. There are certain near-term challenges, but I think if we kind of look at things with a 2-3 year horizon, probably these names, I would look at these names from an accumulation standpoint.
Vishal, even as we speak, DRL has come out with numbers. The top line is down roughly around 5.5% and PAT down 68%, EBITDA margin at 12.5 versus 26.7. Seems to be a miss on the numbers.
Right. So I think the decline is steeper than the street was building. So I was probably around 45-50% decline in the PAT numbers. So this has come steeper than expectation, than the PAT decline. I think there would be one-offs here. We will need to wait. We'll need to see this more closely.
Top line though, Vishal, we have you fortunately, so might as well take advantage and have your view.
I'm sorry, I didn't get you.
The top line, Vishal, it's coming at around 8,000 crore. How are you looking at that number in particular?
Yeah, I think we were there only. The street was there. It's probably a bit lower, I think, than the street expectation.
Perfect.
Low single digit miss on what the consensus was.
Right. Perfect. And Vishal, for Dr. Reddy's, right? What is it that you would listen in on the con call to try and figure out as to how should they make up for the Revlimid, right? Because that's a big dent. And then you've got semaglutide as the other big piece, which has also gone a little bit awry, right? So how should one look at those two pieces, and what on the con call would you be really glued on?
So I think imminently the most important thing for them is to restart supply of semaglutide in Canada. So that's the most important thing to support numbers from a near-term perspective. And I think from a medium-term perspective, they have the biosimilar opportunities. And the most important among them is abatacept, which probably should come through in December 2026. So another 2 quarters from now, that should also come in favor of Dr. Reddy's. So these 2 opportunities should largely, not entirely take care of the Revlimid erosion, but it should certainly help them in a meaningful way to kind of fill the gap.
Vishal, thank you so much for coming in and speaking to us, giving us that perspective, and a little bit of zooming out required. So you helped us achieve exactly that.
Thank you.
Thanks. Okay, completely timed out on this edition of Market Edge. Hope we were able to give you that edge at least today, and all the time we have. Thank you so much for tuning in.